Good day, Doctor and everyone. We are from Group G. Today, the topic we our group going to present is Takaful versus conventional insurance. Now, let's begin. So, these are our group members, which include Fong Jingying, Loi Xuan, Dr. Pei Fen, Gan Kelly, and Lim Yiting. So now let us begin to start with 1.0 introduction. I will pass to the next presenter. Thank you.
Good day, Doctor and everyone. My name is Fong Jingying, Maternal Process 956. I will start my presentation with introduction. First, insurance is a legal agreement between an insurance company and policyholders. Policyholders will receive from insurers for their losses under particular unexpected events. There are two main types of insurance. First is conventional insurance. Another type is Takaful. In this presentation, our group will present the differences between Takaful and conventional insurance, key issue of the Takaful, and recommendation. I will pass the presentations to next presenter.
I am Loishan with matrix number 269528. Now I'm going to present on the topic. Takaful is an Arabic word in the meaning of guaranteeing each other, where takaful is permitted under Islamic law or Sharia principles. Takaful can be defined as a form of Islamic insurance in which participants put money into a pool system to indemnify one another in the event of loss or harm. By contributing a specific donation, also known as tabaru, into a fund, each participant fulfills their commitment. This fund is managed by a third party, the Takaful operator. In general, Takaful insurance covers many of the same coverage options as conventional insurance. There are two main types of coverage which offer under Takaful insurance are General Takaful and Family Takaful. General Takaful offers coverage for the personal property including house, place of business, and vehicles. Family Takaful plans have a predetermined duration and assist in protecting your family members from hazards like illness or death, which provide similar advantages to life insurance. Furthermore, there are three main types of Takaful, which are Wakala, Muharaba, and hybrid model. Wakala is known as an agency where it will be worked by the Islamic insurance company or Takaful operator. For Muharaba contracts, profit sharing arrangement is among the contract manager and the Takaful participants, while hybrid model is the combination of Wakala and Muharaba. Next slide, please. Now I will present the benefits of Takaful insurance. So the main benefits of Takaful insurance are sharing the surplus with the participants. It can be seen as a mutual benefit concept as this fund is based on the risk-sharing concept with the participants with the overseeing of Takaful operators by obeying the Islamic law. Other than that, the advantages of Takaful are the contribution to the economy. Takaful is vital to impact savings, investment, and income, which will determine the economic growth of the country. The nation gross domestic product, which also known as GDP, rises as a result of promoting investment, which also raises the income of country. Additionally, another benefit of Takaful is interest-free as it complies with Sharia. The goal of Takaful is to promote collaboration among participants. It can encourage alliances and collaborative efforts between local and foreign businesses has produced a favorable consequence. That's all from me. Now I will pass to the next presenter.
Now I will continue the presentations. So what is the conventional insurance? Conventional insurance is a standard contract involving two parties, the insurance company and the policyholder. It is an arrangement whereby the insurer promises to the policyholder in return a predetermined premium. The insurer will pay the policyholder a certain amount if a particular event happens. In addition, additional, conventional insurance policies are also basis indemnity contract. A refers to the underlying contract between policyholders and traditional insurer, in which the traditional insurer commit to compensate charging. According to the Sharia law, three important components of conventional insurance contract are forbidden. That is gara, riba, and mases. Next slide, please. There are many benefits for conventional insurance. I will talk about three of the benefits. The first benefit is risk reduction. Uh, Traditional insurance shift the responsibility for bearing risk away from policyholder and onto the insurance company from which they purchase coverage. Because of this risk transfer, there is a lower probability that the insured may face financial difficulties due to any other unexpected incident. Next, improved protection. Conventional insurance enables the insured to devote more time and financial resources to activities that otherwise would not be able to participate. For example, liability insurance enables business to invest a significant portion of their revenue into expanding their operations. The last is that conventional insurance will help us build saving habits. The insured individual will set aside a certain income to pay premium. I will pass the presentation to the next presenter.
Good day, doctor. I'm limiting with matrix number 272006. Now I'm going to present the differences between Takaful and conventional insurance. One of the most significant differences between Takaful and conventional insurance is that Takaful is based on Sharia law. Takaful is free from principle of gara, masil, and riba. The main reason for the creation of Takaful was to eliminate these prohibited elements from conventional insurance. In conventional insurance, the insurer bears the risk associated with the insured. By contrast, Takaful is based on the theory of shared risk. Participants donate to a Takaful fund, and in the event of a loss, they receive the amount of their claim. In addition, Takaful participants retain an ownership interest in the fund. Unlike conventional insurance, the participants' contributions are invested into halal or Sharia compliant funds to earn investment income. The table below compares Takaful insurance to conventional insurance. By not exchanging risk through payments made to the Takaful operator, neither the operator nor the participant is selling or purchasing risk coverage, as is evident from the comparison table below. Takaful differs from conventional insurance in this way. Fund management duties are taken on by a Takaful operator on behalf of their participants. Therefore, the operator is not taking on any risk. Instead, the risk is shared by the participants who chose to do so. In a conventional insurance contract, two parties agree to take the risk of the other party in exchange of a premium, and the second party guarantees to pay the first party a specific sum of money within a given time period in the event of an unknown event. Next, Takaful operates based on corporations, while conventional insurance is based on risk assumption. To reduce the risk and variability related to equity, conventional insurance companies make significant investment in fixed income assets on their balance sheets. However, as interest is prohibited under Takaful and Sharia law, investment in fixed income securities are not permitted. Moreover, the exchange of interest is the foundations of the contract in conventional insurance. Essentially, the insured pay a premium to purchase the conventional insurance, and the insurer offers protections from the risk cover. But Islamic law prohibits concluding insurance transactions based on a buy and sell agreement. In Takaful, it is the policyholder's right to know that their money is used appropriately and that returns and settlement funds are not derived from immoral practices. However, conventional insurance policyholders do not have this same right. It is the right of every Takaful policyholder to know how the profits from various investments are distributed. But under a conventional system, there is no set formula for profit distributions, and the decision is entirely up to the firm management. This is all from me, and I will pass it to the next presenter. Thank you.
Good day, doctor. My name is Gan Kelly with matric number 271389. Now I'm going to present about several key issues and challenges of Takaful. One of them is lack of consumer awareness. Islamic financial institutions have the responsibility to develop and adopt the Takaful concept throughout the entire world. Currently, it seems like that Islamic financial institutions are not putting a lot of effort into developing Takaful. It is a big challenge and it is one of the reasons why Takaful is not well known. Many consumers are still not familiar with the concept of Takaful, and some of them are even unaware of the existence of Takaful. Thus, the majority of them still stick to conventional insurance. Moreover, corporate governance is also one of the key issues of Takaful. Although the Sharia Supervisory Board and the board of directors of the Takaful operator have a relationship built on mutual trust and honesty, there is still self-interest between them. At the present time, the Sharia board's mission and responsibilities remain unclear. This is due to the lack of manual and standard terms of reference for Sharia boards, and also the presence of additional issues and potential conflict of interest between Sharia scholars. Apart from that, board of directors member size and the proportion of non-executive directors bring a negative impact to the relationship regarding cost efficiency. A huge size of board of directors member may be less cohesive and harder to coordinate. This is because having larger board members may increase the chance of free riding by individual directors, as well as worsen decision-making outcomes that bring to the failure in cost efficiency. As a result, a smaller board size is more suitable for Malaysia's Takaful operators. Another issue and challenge of Takaful is solvency and capital requirements. It is difficult for regulatory regimes to give more consideration to interest-free loan, or also known as CAR, in order to understand the solvency requirement for Takaful organizations. Besides that, if prioritizing the surplus distribution and contingency reserve techniques, which could result in a reduction in the capital requirement for Takaful businesses. Last but not least, Takaful also faces lack of standardization. The fundamental cause of the great misunderstanding of standardization among scholars is based on different regions. In general, every region interprets Takaful differently. The lack of standardization in Takaful insurance due to regional differences will damage the Takaful's development. The Takaful sector will confuse which model to adopt and how to implement or practice because what works in one region may not work in another region. In addition, this will cause uncertainty and have a bad consequence on the overall ethics of insurance, transparency, disclosure, and consumer protections. Next slide, please. Then I will continue to present about the opportunities of Takaful in Malaysia. The latest studies suggest that over the last 27 years, Islamic insurers, also known as Takaful operators, have grown rapidly. Although Takaful operators are most abundant in the Middle East and Africa, Southeast Asian nations, including Malaysia, Indonesia, and Brunei, have been in existence for over 22 years. Throughout this period, the financial institutions representing the sector have contributed to personal and national development through resilience and stability in their growth. Based on the research that has been done by the researcher, Takaful in Malaysia is predicted to grow by 19.6 annually much higher than the 8.4% growth rate in conventional insurance. From 1997 to 2005, both family and general Takaful contributed significantly to gross national products, or also known as GNP, respectively contributing from 0.7% to 1.2%. Council on American Islamic Relations claims that Takaful is also expected to grow rapidly in the Muslim market in the future. It has been estimated that there are 1.2 billion Muslims in the world, which represents 19.2% to 22% of its population, and that the number is growing at a rate of 2.9% per year. Hence, Takaful growth can therefore be supported by factors such as population size. That's all for my part. Thank you.
Good day, Doctor. I'm block paper with the metric number 269953. Now I will continue the final part in this presentation, which is conclusion and recommendation. In a nutshell, we can conclude that Takaful can be defined as an Arabic term that brings the meaning of guarantee each other, which is permitted under Islamic law or Sharia principle. While the conventional insurance can be defined as an indemnity contract where the policyholder will transfer the risk of unforeseen events to the insured or the insurance company by paying premium on it. So based on the explanation given by the other presenter just now, we can conclude that there are 5 elements or dimensions that can differentiate between the Takaful and conventional insurance, which include the party involved in the contract, the principle of Gara, Maisir, and Riba, their concept, the investment fund, and the transparency. There are several issues that happens founded in the Takaful insurance industry. So there are several recommendations also that could be used to cope with the issue and the challenges that founded in the Takaful industry. One of the recommendations that can solve the issue is the Malaysian government can cooperate with the Bank Negara Malaysia (BNM), where both of the parties can regulate the framework in Islamic finance industry, which include the Takaful. This because a favorable and standardized regulatory and government framework in Takaful should be implemented in the Takaful industry to smoothen the flow of the Takaful model. The researchers stated that an effective Sharia framework helps to improve the uniformity and harmonization of Sharia ruling in Takaful. A flexible model of Takaful needs to be utilized by the Takaful operator based on the changing trend in the Takaful industry. For instance, in family Takaful has become a more popular trend nowadays, and the akad or the contract, principle of contract, and tabaru of the principle of contribution are more suitable to be used in this family Takaful to ensure that adequate protection has been given or provided to the participant in Takaful insurance. In short, we can conclude that by having a uniformity and adequate regulatory and governmental regulation framework, it could enhance Takaful performance in the Takaful industry. So that's all from us. Thank you.